Welcome to Bitcoin Escape Plan. By the end of this video, you'll know everything you need to about these recent price movements for Bitcoin. It does look like it's going down as I'm recording, so that will be interesting. We'll start off with the 4-hour chart as always, and then I do have some other points that I want to talk about in this video about the market cap and an important narrative that I think not many other people are talking about why the overall price and market cap of Bitcoin is being suppressed in this cycle. Very interesting. We'll get into that later in the video, as well as a check-in on Bitcoin dominance and what it likely means moving forward. If this type of content is interesting to you, you can check out bitcoinescapeplan.com. You can go to the Jedi archive down at the bottom there and scroll through previous email newsletters. Most of them are just accurate prices. This is the one from earlier this week, and you would have seen most of what would happen this week if you were subscribed on Monday. Can't speak English. Go over there, subscribe. Wonderful. Let's get back into Bitcoin. Don't know what that was that I just clicked on. So on the 4-hour chart, let's check it out. We're in a downward trend at the moment since it looks like we started breaking down late Saturday into Sunday. We lost this 88.9K fib pivot, which I do believe we talked about in Friday's video. So at the moment, we are going to wait until we see a full expression of this movement. But I remember looking at this earlier. We do have, oh shit, looks like we broke through it. That's not good news, everybody. I was going to say good news. That's not good news. This is the anchored volume profile. This is the most volume on the chart at key levels where people either bought or sold en masse. This is where it has been for the last couple weeks. Really, I believe since this range right here. So late November, actually, is where this started to fill out. That's where basically where people started to step in and say, you know what, I do want the price to be higher than this point. They didn't step in down here. They stepped in en masse around 87. And that's currently what we're seeing at the moment is this a wick or a close? This is the weekly chart, so we're going to want to see that by, it's currently 10:30 in the morning Los Angeles time, so it would be, I believe, 4 p.m. Los Angeles time. It's when we would want to see that, which is like 5.5, 6 hours away. We want to be above that line. That would be not a good signal for us to be below about 87.7K. And there's not very much holding us above that at the moment. As you can see, the only other level that I have written down, which long-term viewers of the channel already know this, I've talked about 86.1K a million times. Very important previous weekly close that we want to see strength above, and a possible bounce above that Fibonacci pivot, but it's more likely maybe it would close here but wick there if we're going to see strength at this side of the channel, which I'm not convinced of at the moment. I have talked about this before. This guy right here, this is the anchored VWAP. We've been talking about this since November, a long ass time over here when we broke it. We did have a break above it, which is initially good news, and I thought was going to allow a continued move towards 100 in this particular instance, but it doesn't seem like that's the case. If we do take a broader view real quickly on the chart, I've talked about this in multiple other videos. My baseline expectation is that we're going to not close that much higher than December. Right now, we're currently about to close below where December closed. Not where it wicked, but the candle that we're in right now is fighting to keep the wick above the close of December, essentially. And this is pretty much the first time right now that we're seeing a possibility that we are going to break further below that. But I expect now to March to chop, with sometime between late February and early March being the last real attempt at this guy, 106.8K. But it's not currently looking very good for that. You know, being at this, that means we would need to see a ton of liquidity enter the market this week, essentially, to flood in on the last couple days of January to actually, one, get us back above the monthly SMA. Because as you can see, we're currently below the monthly SMA. It's about 87.4, it looks like. No, that's where we are. The SMA is at 89.9K. Which I think is another Fibonacci pivot on the lower time frames that we have already discussed. So, what does that mean? In the short term, what I would expect is more chop and a slight drop. It may not be until February that we get the proper drop to, I would assume it's going to at least stop at 80K again, but if it does break lower than 80K, it's going to want to see 76. There are some interesting things I want to look at historically on the chart a little bit later on, but I actually want to switch to some of the other topics real quick, and let's talk about the market cap, which I think is something that is overlooked. We kind of take it for granted that it's just going to keep going up forever. That's just the narrative that we've accepted, which in fairness, I do think is correct, but there's certain milestones that I think are very important for market cap that we can actually base off of other companies, and I think that this is the main thing that people are ignoring. I mean, one, shout out to silver, good old silver. Silver was like down here for most of the year and is now, or most of the previous year rather, and is now the second most valuable asset on the planet Earth. They don't track real estate, so I'm sure real estate is dramatically higher than that. Probably oil too. I'm sure there's a couple things that are actually higher than gold and silver, but whatever. Congratulations to them. Buy them a birthday card. So the main thing that I think people were ignoring this cycle, and I say this all the time, I've said this so many times on threads, specifically for Berkshire Hathaway. For Warren Buffett, the reason why Warren Buffett hates Bitcoin is not because he doesn't understand Bitcoin or because he doesn't have people on his staff who understand Bitcoin. The reason he hates Bitcoin is because the company that he built for his entire fucking life is worth less than Bitcoin is. That's why he hates it. That's why he doesn't like it. Because if he told people that he liked it, they would buy more Bitcoin instead of Berkshire Hathaway. Very simple. So in the same vein as that understanding of how reality actually functions, these companies, NVIDIA, Google, Apple, Microsoft, and Amazon, and on some days, Facebook, when they feel okay about it, those companies do not want Bitcoin to be more valuable than they are. So the peak in market cap this cycle was about 2.5 trillion, I believe, right up here. Just slightly above 2.52 trillion, which would put it right below Amazon. And I'm sure Amazon was slightly lower than that. I don't have the market cap chart for Amazon because this is a Bitcoin channel. Although, let me know in the comments if you are enjoying when I talk about other assets. I'm trying to mostly focus on SPY and gold. I think just for the purposes of like keeping it fairly simple rather than going into a bunch of different equities. But this, I think, is a very important narrative moving forward. I wrote about it in the book that I will eventually release. I don't know what's wrong with me. Don't judge me. All right, market cap. So the main narrative here is just that this cycle, Bitcoin was not meant to get above the market cap of these 5 companies. That was the kind of like underlying thing that was occurring that, again, I don't see many people talk about this. I definitely have my tinfoil hat on for this. I'm not saying it's like based on any real fundamentals or whatever. Just the psychological factor of, again, Warren Buffett doesn't like Bitcoin because it's more valuable than the company that he worked for his entire fucking life. So Amazon, Microsoft, Apple, Google, and NVIDIA and all of the lobbyists and everything else that they control are not going to be in favor of Bitcoin exploding. They may have some indirect exposure to it, but until they're properly capitalized with it, if they choose to be, they're going to be more invested in their own businesses growing rather than Bitcoin itself growing. They don't want it to be super, super relevant, So some of this we can look at just from a cyclical nature. And this is actually interesting. I was looking at this before. So we've talked about it many times in other videos that I think the realistic price that Bitcoin can drop to this cycle is somewhere between about 50 and 73, probably lower than 73, but whatever. I think that's 2024. This is post ETF Bitcoin. So anything below here, and the people who bought into the ETF originally are going to be in loss, which they will not like because they're old and they have lots of money and they don't want to waste it on this shiny Bitcoins. But this is essentially the same trend on both the market cap and the price. This is 58.9 is the bottom of those closing candles. So there's a really good chance that we see strength there. But the interesting point that I noticed, if we go back, way back over here, so this is 2018, 2017. This is the peak. You're all familiar with it. The top of that candle was about $232 billion. And as you can see, when we go through the bear market progression, we wick to that and then fail it. Then we go to new all-time highs in 2021. And then where do we go at the end of that? We stay above the closing candle, but we go to the previous wick. So this is the previous wick, and we drop slightly below that previous wick. But the bottom actually stays well above where the closing candles were. So this is why it's very important for you to understand your time frames. I love the weekly and the monthly time frames for that because it just gives you a lot of information about why certain levels are important. And that's the same on the price as it is on market cap. So if we are to use that as our basis for a rule, which maybe it's not a rule, but I think in this particular instance, it's very likely that it plays out in a similar way. So this is 2021, this is our wick. Our wick is to here, which means theoretically the price is going to go below that wick. And if we think about it psychologically in this particular one for market cap rather than price, because it's a little bit different for price in this instance, still important for price, but a little bit different for market cap. So this is 1.32 trillion at the top of that wick, and right here at the top of that candle, 1.15. And actually, because we have a double peak in this situation, it might actually be the 1.09. Sometimes it's like the range between the two double peaks that's going to be most important, which we're going to have to factor in for here, but we don't have to worry about that till like 2030, like a long time away that we have to worry about this range. Currently, this is the one I would be more focused on because we're going to want to see a strong reaction to there. And if it follows the same rule, that means that the actual price would be above 1.16 trillion, which let's go see. What is that? Well, 1.16 should be lower. This is a great calculator. No, it's way lower than that shit. 70,000. Still too high. 61,000. Nope. Lower than 61,000. Goddamn. So it looks like probably 58,000-ish. This is the circulating supply right now, so this will not be accurate of by the time we actually get to later this year, because obviously the block reward will update every 10 minutes, but that's a rough heuristic essentially for what we could expect. So that's what we talked about this for multiple time frames. Where's this guy? This is price 58. Where is 58? Right around here, which again, right at the bottom of those closing candles. So it's pretty reasonable to me that we're going to see at least an expression to there throughout the rest of the year. I'm still of the opinion that that is probably going to be in Q4. But the primary narrative, and we talk about this a lot on this channel, both me in my head and out here on the YouTube, the psychological levels of certain numbers, like 100K is the one that we're dealing with right now. So we just failed strength to get back to 100 when we wicked to whatever that was, 97.9. We essentially were winding up to see if we have the psychological power to get back above the 100K level, and we were rejected off of it. Super important. 98K is not as important as 100K. It's just not as important. People don't care. They don't write news articles about 98K. They write news articles about 100K. It's just easier. It's going to be the same case with 1 trillion market cap, which 1 trillion market cap is down here, which that probably is closer to that 50K target that I had mentioned. Yeah, right around it, slightly above 50K. So, which also makes sense, if we think about if 126 is where we actually went to, right? But same as when we did 70K in 2021, that wasn't the important number. 100 was, and we failed 100. That was the point of it that time around. I think 100 is still the important one now. I think broadly, psychologically speaking, it's easier for a market to interpret one number for a very long time. That's why Cathie Wood says $1 million per Bitcoin. That's why she says that. So that you'll continue to let her fucking hold on to your money for the next decade as it takes to get that far. I don't think like some people talk about how it's going to happen in 2030. I don't think so. I think it's 2033 by the math is the earliest. And actually it's longer now because we did not go. That was predicated upon us going higher, which we did not do. And I still do not believe we're going to do this year. I know you don't like to hear that, but like and subscribe if you want the fucking truth, man. I'm just going to tell you what the charts are telling me. The charts are telling me we're probably going to break down further if we cannot rise above this level by March. If we hit that level and we have strength there, we start closing above it, then I will change my fucking opinion, and I will go in the opposite direction where maybe we do get to see new all-time highs, but I don't see that reflected by reality. So let's go back to the market cap real quick and let's see if we are going to drop down to 1.16 trillion. What are some of these other companies? These are the largest companies on the planet. That still puts us at the, in terms of companies, what is that? That would be like the 14th. We're still larger than the 14 largest companies or right neck and neck with them, Really, at the moment, there's only 5 companies on the planet Earth that are worth more than Bitcoin, although TCM is probably going to go above that once Bitcoin continues to drop down further. But that psychological narrative, the same as how 100K is important, the same how 1 trillion is important, I really think that this is going to be a downward pressure this next cycle for Bitcoin. Is just the narrative of, can it beat the Magnificent Seven? Is it going to be able to sustain a market cap above these levels? And this one in particular, so 2.5 trillion, which I believe, nope, that's way above it. What did I say, 2.5? Is that what it is? Nope, too high. Yeah, so right around 125,000 per coin, which I know nobody wants to hear this, but I don't think we're going to see those prices again until at the earliest late 2027, but probably sometime in 2028. And historically speaking, it would be later in 2028. That is an election year, so it's hard to say. If you're paying attention to the internet at all right now, you know that it's a state of chaos. It's all that it seems like in the US. So there's too many variables between now and then for me to believe that price is just going to start ripping. It doesn't make any sense for it to do that. I'm going to move on from the market cap section. And actually, before I get into the Bitcoin dominance section of the video, I do want to go briefly touch in with gold because it is at relative new all-time highs and is continuing to show strength. And I think the important thing that we want to keep in context here is this is true for all assets. All assets are going to find psychological numbers that are more important than anything else that's going on. $4,988 is not important. $5,000 is important. That's the narrative that's going to cause a rise like this. That historic kind of upswell is what's going to continue. And I got to be honest, I'm still of the opinion And I feel kind of crazy saying this because I've never been like a big supporter of gold, but I'm still of the opinion that gold is probably going to continue topping until 2029 or 2030. Now, there may be significant pullbacks during that, but the broad trend is still that is going to continue. I don't think that it's done. There probably will be a pullback. We are seeing a similar progression for SPY, but SPY has already had its pullback, whereas gold ripped right through the equivalent Fibonacci pivots for its own level. But while these other two assets, that hold so much of the value in the world is held either in the stock market or in gold itself, while those two assets are doing really well, it just doesn't make sense that capital is going to randomly flow into a chart that looks like that. That's not how reality works. I know people don't like hearing that, but that's not how reality works. Money is not going to magically appear in the Bitcoin accounts, especially when the Clarity Act as well is being delayed. They're not able to find consensus because they're trying to nerf the stablecoin yield and decentralized finance, which is not good because in 2022, when everybody lost their money, myself included, and Celsius and Voyager and BlockFi and FTX, people who didn't lose their money was people who had it in decentralized finance platforms like MakerDAO or Sky Finance, whatever the hell it's called now, or in anything else that you can find on DeFi Llama, Uniswap, in Aave, I'm sure in a couple of the other like collateral-based loan ones. The decentralized market is actually safer in the event of a major downturn because it's just going to be based on your collateral. If you have the collateral to pay it off or to make sure that you have enough of a supply for whatever you're borrowing, then you're not going to get liquidated. Whereas if a company goes bankrupt, your money is gone forever, period. There's nothing you can do about it. Just haunt your dreams for the rest of your life. So, overall price progression still looks bearish to me. Does not look positive. Let's look at Bitcoin dominance. What is Bitcoin dominance telling us about the overall trend right now? So Bitcoin dominance, for anyone who is not familiar, Bitcoin dominance just refers to the amount of money that is in Bitcoin relative to the total crypto market cap. So there's a certain amount of money that's in everything else. There's a certain amount of money that's in Bitcoin. Currently, 59.93% of all money in crypto, excluding, I don't know if this is the one that excludes stablecoins or not. I should know that because I use this chart all the time, but whatever. 59.9% of all of that money is in Bitcoin instead of elsewhere. Now, normally, what we would expect to see, and I say normally, but we really don't have, there's no normal in crypto. So the Bitcoin dominance chart is not really relevant until they start making altcoins in 2014, 2015. That's the first time we see any divergence at all. And then it's not really relevant until the, what the hell are they called? ICOs, initial coin offerings with Ethereum. When it becomes very easy to print other coins and altcoins and stuff like that with Ethereum, that is the first time we actually see Bitcoin dominance drop off a cliff and money starts flowing out of Bitcoin to everywhere else. So what we've seen since that point is we found a local bottom there and then we rose back up. The 2020 cycle was also pretty heavily influenced by altcoins, which is why so many people, probably some of you listening now, are probably holding on to garbage altcoins that you have no business holding at all, that somebody told you was going to rise, and you can't verify the information, but it chose to do it anyways. So starts bleeding in early 2020. After that peak, we get one more peak for both Bitcoin dominance and Bitcoin and altcoins and everybody. And then it starts dropping off a cliff and takes a very long time to consolidate. But what's interesting is it's been really gradual since then. Very, very gradual since that upslope back above the monthly SMA in a way that, again, I always refer to it as a choose your own adventure story, specifically for Bitcoin dominance, because it's not really a lot of cyclicality. It's kind of every single cycle has been different. And so different that you can't really base analysis off of it the same way that you can for price or market cap, like I did earlier in the video. It just doesn't work that way. So what we're looking for now is this actually looks pretty similar to the price progression where normally it would break down and the money would start flowing out of Bitcoin elsewhere. But that would determine that we're going to have some form of an altcoin season, which I don't see any evidence for when Bitcoin is breaking down from highs instead of like where that would have worked is if here, when we started breaking down Bitcoin dominance and then we get our high here in October, if we had properly failed on the Bitcoin dominance chart there and the money started flowing out, that's where you would have seen an alt season. That's where you would have seen actual gains in alts. But what we're seeing now is the price got to those relative highs and it hit the monthly SMA and it held onto it for dear life. It does not want to break it. Even Benjamin Cowan, I don't think anybody is expecting this many touches on the monthly SMA. This is not very common. It touches it once, it breaks through. It touches it 2-3 times, it breaks through. It touches it once, it breaks through. It touches it like 2 times, 3 times, it breaks through. Like, very uncommon for us to have, 6 months? 1, 2, 3, 4, 5, 6 months where we're right on top of that monthly SMA. You can't even find another time on that chart, on this chart, where that is the case, other than maybe super early there. But I don't really count that. That's a completely different world for crypto. Has nothing to do with our circumstances for now. So more than half of the money in crypto at the moment is parked in Bitcoin. Again, I'm not sure if this includes stablecoins or not. I forget. But I don't expect us to drop down further than here this time. And what that means is not good for the altcoins. That's not a good sign for the altcoins. It doesn't mean money is going to flow back to there. I think in general, fundamentally speaking, that altcoins are just trades. They're not investments. That always bothers me when I watch other people's channels when they're like, oh, you're a Bitcoin maxi, you're a Bitcoin maxi. And it's like, no, you either fundamentally understand how capital preservation works or you don't. You can't preserve capital in an asset that doesn't have the same intrinsic value as Bitcoin and is tied to it. Unless this chart breaks down, there is no money flowing into altcoins. The altcoin money would have to come from outside of the crypto network. And when money comes from outside the crypto network into the crypto network, this is where it goes first. It goes to Bitcoin first, and then it goes everywhere else. So this particular cycle, we would have already expected a breakdown of Bitcoin dominance by now. That would be normal for us to see that. Or really, in this particular case, we saw a continued upswell into the bear market. So that's very well what we might see. And kind of, quite frankly, what this is indicating to me, like, for it not to break down at this level, where, again, we don't have another instance on the chart where it's like that. That indicates that it's going to go higher, which means more and more money is going to flow into Bitcoin itself, which I do see being in alignment with the stablecoin bills, even though they don't have their shit together, they're not ready for it yet. I don't think that those are going to get done early. I think that they're going to get done right in the time or whatever that they are supposed to, and maybe even get extended longer. It's not like we have the most organized government in the world right now. So I would expect there's a possibility, one, that we're just going to chop around here for a while. You do want to pay attention to if we do break below in a meaningful way, which doesn't look like it at the moment. People are not seeing the price go lower in Bitcoin and panicking and jumping into altcoins, which is good. That is the one thing I will say about this chart. That actually looks healthier to me than here. This is sporadic. This is people not knowing what to do with their money and just, chucking it into the meat grinder. This is, oh, okay, I kind of get it. I kind of understand what's going on, This is same thing, chucking the money into the meat grinder to see what they can get for their profits. But this is super healthy. This is people just kind of understanding, all right, well, my money should be in Bitcoin instead of other things, And I don't know if we see another breakdown this time. I'm not totally sold that we're going to have another altcoin season anytime soon. It would probably be Same for Bitcoin, 2028, 2029 at the earliest. It's possible that those have been decoupled entirely from, how we're used to the price performing, which again, I know nobody wants to hear, but let's do a quick recap for Bitcoin itself. So March is where I would expect the highest progression towards this peak, 106.8K, if indeed we are going to see it, which is not guaranteed. But otherwise, we do expect it to continue to break down towards those levels. And let's take a look real quick at how this occurred in 2022. So same thing. This is a little bit pulled forward for us in the current cycle because our peak was in October, and then we broke down hard in November, and we're already at the monthly SMA by that breakdown, I believe. So it was more violent than the 2021-2022 instance. And in this particular case, we chopped around at the SMA for 4 months before fully giving it up. This is April when we fully gave it up. But again, interacted with it these whole times. This is my basis for, so January, as you can see, we started closing toward it. Right now, again, we are on it. We are below it, actually, which is an indication that if we expected this full breakdown to be in April, we might actually be seeing it in February because we're already below this. So unless we can magically pump, again, this week, we need to pump above 89.9K, which is not that crazy, not impossible for that to occur. But that's what we need to see. Otherwise, we're going to see a continued breakdown and a breakdown hard into February, which is not a good sign for strength after that. Like that would be a sharp pull on the chart downward where it would be curious about other targets. But the main thing that we're not going to be able to anticipate is which months are the most violent ones. Because again, this time our violent one was November. That's way more violent than any of the other candles, I mean that's also a pretty violent November candle, 37%. So we dropped 17%. So we dropped 17%. 37%. Jesus. You're going to want to pay attention for that in the summer. My baseline assumption is it will do something similar to this, though, where it'll peak. I think it'll be before April this time, probably late February or like early to mid-March. We'll see a peak and then the full breakdown. If, again, we don't see it already happening at the end of January into February, because this is pulled forward and we're pulled back in the current cycle. So it's very possible that that is the case. But that's what we have to look forward to this year is like a couple more major drops that will be kind of difficult to anticipate. I mean, pretty normal for there to be a peak like March, April, and then for there to be a minor rally into June, July. But as you can see here, like that would have been here. So we'd have to go to let's check out the weekly chart real quick for May of 2022. March, April. Yeah, it's already breaking down hard in April. Yeah, I mean, as you can see in May, there's an attempt to reclaim it. But that's pretty much going to be the story is we're going to get major drops and holds at random levels that try to reclaim, drop back down, try to reclaim, print a failure, and then meaningfully drop. And we expect something very similar this time every time the price behaves that way. We just saw a meaningful failure at 96 when we were trying to reattempt the monthly SMA or weekly SMA in this particular case. And I believe that we're going to see that continue to pull down below that 96K pivot before we have another interaction with it, which is not bullish for the price. It's just not. That's not reality. We want this to be flat or curved upward. As long as it is curved downward, it puts downward pressure on the price. And as long as it is dropping below Fibonacci pivots, it puts even more pressure. Like if we had stayed above this Fibonacci pivot, all of a sudden it's not that big a deal to get above the SMA. But if we have this SMA dropping below this Fibonacci pivot. Now we have both the SMA and this Fibonacci pivot that we have to get above, let alone 96 in particular. Super important level on the anchored volume profile, like one of the most pivotal points on the anchored volume profile, and only slightly above on the 4-hour time frame, that 95.5 for the anchor VWAP. Might even be right at that level right now for 96. Yeah, 96.2, because that keeps rising and will continue to keep rising. That's the whole point of that tool. So the only other instance that we can really look to for that is 2018. 2018, we do see a similar breakdown. A little bit more consolidation there, but sort of same thing where it was fairly violent on certain months. This one, at least it fought to reclaim it. But where we are now is just, it looks uglier. It looks ugly. Like, that's not good. We're so far below the weekly SMA. We were not at that point until whatever, like over here. Well, no, I guess, yeah. December 2021, we were already below it. Interesting. I think I mostly look at the monthly one, not the... I would assume something very similar to this, to be honest. This is 2022. So that's what we're seeing right now is a drop into the end of January. Another attempt, which for this, that would be 96 for us again, would be where we're going to attempt in early February. Possibly see another failure. And then an actual break of the SMA. So I want you to think of this guy right here, this 47.6K pivot. I want you to think that that is 96K, essentially. Which, funnily enough, that's almost exactly double that. Not quite double that. Math. That would be 94. Pretty close to that. Pretty close to being double that. That's actually very interesting. Didn't realize that before. That level's key, though. I would think of that as the 96K pivot, essentially. And this is our weekly SMA during the same time period. That, I don't think there is a higher pivot point here. Because I do think that this is 96, not 106.7. So there probably would have been a pivot point somewhere up here at that time that on the lower time frames at least that was relevant. That is very interesting though. I would kind of see that as like we're going to hold strength above that, like how I was talking about finding a bottom earlier, and it being probably higher than this point, but not necessarily higher than that point. I would assume that that's going to be an important point on the chart of strength if we're able to hold above that, about 47.6, which I would imagine we would. I do think that there's some scenarios where we may drop as low as 39, but there's a lot of strength in a post-ETF world, in a post-government world, that would hold us above that. But that is very similar to what I expect, is for us to get one more attempt. And you can see right here, the SMA, just like I just described, the SMA broke down below that Fibonacci pivot, and we were able to get above that, and it failed the Fibonacci pivot. So I'm expecting almost exactly the same thing, where we failed this Fibonacci pivot, and now we're going to have to go down a little bit, and we'll probably hold this one again. I don't think we'll break down to this level in February yet, but we probably will retouch this around that 80K or close to that 80K, because we're already down basically to the bottom of these candles already. So if it continues to break down, that's the only place it can go, But then I would expect something very similar. While it's making that price progression, this SMA is going to continue to get pulled downward, and we won't have enough confidence until we've bounced off that. This will continue to be pulled lower, and by the time that we interact with this guy again, it'll be after a touch of the SMA, probably over here, sometime in February or March. And then this 96K ceiling will act as a ceiling, and we'll bounce off it and continue to break down after that. I know you don't like that, but like and subscribe if you want accurate analysis, because I really believe that's what's going to happen. That's what the chart is telling me. We do not see an upswell. There's no evidence, or of even consolidation on this chart yet. We're not flattening. It's just not what's happening. It's down sloping. That's what's happening. And it's continuing to bounce off key resistance levels that are not flipping to support. So, hate to be bearish, but that is reality. Like and subscribe. I'll see you tomorrow in the newsletter video, where I'll go over a couple more key levels for Bitcoin in the short term, but pretty much the broad trend is that guy. That's the important one. Thank you so much for watching. I'll see you in the next one.